Hello and welcome to the Forex Form Guide. I'm Aussie Dollar Man, and in this video, I'm going to be taking you through the major currency pairs and having a look at them through the lens of WD Gann analysis. WD Gann, whose picture you can see in the bottom right of the screen, was a famous stock and commodities trader from the early 1900s, famous for techniques such as Gann angles, squares, time cycles, the square of 9, and of course the master charts and squares. Well, we're going to be focusing on a different one of Gann's teachings, published in plain sight and overlooked by probably 90% of Gann traders, and yet it's responsible for a large majority of Gann's profits. I'll tell you what that is in just a moment. Before I do that though, just a quick disclaimer, this video is for educational and informational purposes only and shouldn't be considered financial, investment, or trading advice. I don't provide recommendations or guarantees, and I won't accept any liability for losses, nor will I take any credit from profits that you make from your own trading decisions. All my market commentary reflects my interpretation of Gann's work, particularly the tunnel through the air, and I'm sharing these insights to keep alive the work of W.D. Gann, who I believe was a great master. Bottom line, do your own research. This is not financial advice. Trade responsibly. So in this episode, we're going to take a look at the Aussie dollar, US dollar, also at the pound US dollar, the euro US dollar, and the US dollar yen. So let's get cracking. If you're not familiar with the work of W.D. Gann, in my opinion, you should be. Gann traded during the first half of the 20th century, was reputed to have made over $50 million from trading. Some say he was the greatest trader and investor and analyst that ever lived. Others say he was simply a good marketer. At the end of the day, we'll never truly know. All we can do is judge Gann by his techniques, and from my experience, they reflect incredibly well on him. Quick bit of history with Gann. There's his trading record for 1933. 479 trades, of which 422 were profits. That's an 88% accuracy and a 4,000% profit on capital used. If you've never read it, there was an article written about Gann in the Ticker and Investment Digest in 1909. Check out this video on my channel. It tells you a bit more about the sorts of things Gann did and the kind of person that he was. Within that article, there was a quote by a William E. Gilley, who said Gann has taken $500,000 out of the market in the past few years. This is 1909, early days for Gann. And Gilley says, I once saw him take $130 and in less than a month run it up to over $12,000. He can compound money faster than any man I ever met. So some pretty impressive stuff there with Gann. What was his big secret? Well, as I said earlier, Gann had a lot of techniques, and people will say he was a master of time, or he had his Gann angles working, or he had his squares working, or he had astrology working, or numerology working. He had a lot of things working, but at the end of the day, anything that he used would give him a window to trade in the market, a window in time and a window in price. Once he had that window, then he had to resort to his secret weapon, which was form reading. So firstly, what is form reading? Form reading is things like swing charts, sections of the market, looking at resistance levels, highs, lows, and ranges, looking at market patterns like double and triple tops and bottoms, looking at signal bars in the market. These are the sorts of things that Gann used after he had done all of his forecasting work. And without these, it's very hard to make money from the markets. Now, Gann published these in plain sight. There was no coding, there were no secrets. It was all written in plain English in most of his books and courses. The importance of learning how to form read a market, learning to look at different time charts, learning to swing trade. And yet 90% of all the Gann books and courses on my shelves, and I have a lot of them, barely touch on form reading, if at all. So that's what I want to focus on as I go through these FX markets. I will throw some time work in here and there, but for the most part, it's the form reading I want to focus on because that's the main thing that you're going to use as a Gann trader to make money from the markets. Now, I could spend days talking about form reading. I'm not going to do that. There's two sources that I would recommend if you wish to learn more about form reading. One is Gann's book, How to Make Profits in Commodities. Chapter 2 is dedicated to form reading, and there's a lot of good stuff in there that most Gann traders have not spent enough time on, if any. The place that I learned form reading from was Safety in the Markets Active Trader Program. And the things that I learned from both of these sources form the bulk of my trading system today. So let's get into the currencies. We'll kick it off with the Australian dollar, US dollar. If you're new to the channel, firstly, welcome. Great to have you on board. I like to look at markets in a split screen approach on multiple timeframes. I think it's very hard to get a sense of what a market is doing. No matter how many things you throw at a market, it's very hard to know what it's doing if you're looking on one time frame. So I'll have typically a monthly chart, a weekly chart over here. So for example, that's a monthly move there. I can see that monthly move broken down into smaller weekly swings. Then down here, I've got a daily swing chart. So for example, this move up here, this weekly swing there, I can see that weekly swing broken down into smaller daily moves, and then a 4-hour chart over here so that I can see my daily swings broken down into smaller 4-hour swings. And this is part of what Gann spoke about when he spoke about wheels within wheels. You've got your smaller wheels, like your smaller time frame charts, and they will work in with your larger wheels like your daily, your weekly, and your monthly, etc. In a lot of Gann's books, he'll show, for example, the yearly chart as well. That's probably a little bit too large of a time frame these days. Markets have sped up a little bit, but they do still work in the same way. So looking at the monthly chart over here, you can see that this monthly move down from our September top last year has cleaned out a lot of lows. We cleaned out this low, basically double bottoms there. We cleaned out this low here, and we cleaned out our 2022 low as well. That's quite bearish. Now we're having a bit of a rally. That's not unusual for a market. Markets don't just drop like a stone to one point, then rise really quickly like a skyscraper to another one. They do move in swings. So it's not unusual to have a rundown, take out all these lows. Everyone will start thinking, let's jump in short, and they'll all try and sell down here, and then they'll all get cleaned out as the market has a bit of a pullback. Before we move into this range here, though, I just want to talk briefly about this low. If we look at our 2020 COVID crash low, and we run a resistance card over there. Again, this technique is discussed in those two sources that I mentioned earlier, but you can see we've actually come down and sat on the 75% level of this range. So the range from the 2020 low up to the February 2021 high has retraced 3/4 or 75%. In my experience, that's as far as a retracement is likely to go. If the market now drops below that level, in my experience, there's a pretty good chance that it's going to go back to that low and probably take it out. So this becomes a very important point for us on the Australian dollar. It was the 3rd of February low. It's actually one of the dates that I did nominate for this market. What's important to watch now is how strongly the Australian dollar pushes out of here. So far, not so strongly. So there's two scenarios for the Australian dollar. Either one, this is a major low and we're going to rally strongly from here. Or number two, we're in a strong downtrend and we're just looking for a retracement or a retest on the monthly chart. We'll head up into a lower top and then it's more downside from there. Those are the two scenarios that I see for this market. Now people will say, 2 scenarios? You're supposed to be a Gann trader. Gann knew what was going on in the market. Don't you know what was going on and all these sorts of things? There's 2 answers that I've got to that. Well, there's 3 if you want to include a not very polite one, but I'm a polite person. We'll keep it polite. The first answer is, yes, that's right. Gann could make some amazing predictions, which we'll talk about in a moment. But in order to be able to make that level of prediction consistently on a market, you had to have decoded that market to a very high level. So firstly, yes, Gann could make those calls. In fact, in the Ticker and Investment Digest article that I referenced earlier, there was this quote. One of the most astonishing calculations made by Mr. Gann was during last summer, 1909, when he predicted that September wheat would sell at $1.20. This meant that it must touch that figure before the end of the month of September. At 12 o'clock Chicago time on September 30th, the last day, the option was selling below $1.08, and it looked as though his prediction would not be fulfilled. Mr. Gann said, if it does not touch $1.20 by the close of the market, it will prove that there is something wrong with my whole method of calculation. I do not care what the price is now, it must go there. It is common history that September wheat surprised the whole country by selling at $1.20 and no higher in the very last hour of the trading, closing at that figure. Now that's an amazing call. As you can see, different people have their different opinions on that call. And it's funny, I've seen about 6 different explanations for exactly how Gann did it, and they're all completely different. But here's the chart. The article says in the summertime. Obviously, this is the Northern Hemisphere summer. So over here, Gann's calling for $1.20. And then the day before the option closes, trading at $1.08. And that's the move that you get up to $1.20 there. Phenomenal stuff. And people will look at that and they'll say, oh, well, if Gann can do that, why can't he do it all the time? Oh, that must mean he just got lucky there. But in my opinion, the reason Gann couldn't do this on all markets is that there's a lot of work that needs to be done in order to get that to happen. So if you've been in the Gann field a while, you know there's a lot of work to do. And that's why Gann recommended learning form reading first, because you can learn form reading in a couple of weeks and you can start taking trades and you can start learning the ropes. And in trading, you've got to learn mechanics of where to get in, where to get out, how to put a stop loss on, how to manage your risk, how to manage your emotions, and all of the psychology stuff that goes along with it. Gann gives that to you in plain English in most of his courses, and you can learn it there. But there was higher level knowledge as well. And once you start decoding a market to a higher level of knowledge, you can add in things like time cycles. And there are different kinds of cycles. You've got planetary cycles, like geocentric and heliocentric. You've also got law of vibration cycles, which just work off numbers. Then you've got inversion solutions that come in there as well. That's a whole other story. That takes time to solve. And then you've got things like the squares and the master charts. And then you've got things like roadmaps, history repeating itself, and all these sorts of things. There's a lot of work involved in setting up a market. And in order to do the kind of forecast that Gann made on the wheat chart, where he could nominate that time and that price and link them together and know that the market must go there, you have to do an enormous amount of work on a market. Now, this is back roughly 100 years ago. They didn't have computers back then. They didn't have calculators that we have back then. It's all done by hand. Yes, Gann had a team of people working for him, but you can imagine with him being quite secretive, very few, if any of the people working for him would know his entire system. So for Gann to have a large number of markets set up with the full amount of knowledge that he had is probably unfeasible. So what does he do in the meantime? He uses form reading. This work here, the squares and the master charts, is where you want to be if you want to make calls like that. But in order to get there, you've got to have the time cycles done first. There is a quick method to that where you can get them set up reasonably quickly. But if you want them done accurately, it does take some time and you will need to solve the inversions. Now, Gann never taught all of this stuff. He did code it and put it in the book, The Tunnel Through the Air. And I've recorded an audiobook of that on the site if you want to listen through that and try and do some decoding yourself. And to help you out along the way, I've also made a small playlist, Guidance for Gann Researchers, and those two videos there, Tunnel Through the Air Decoding Where to Start and Recommended Reading for Gann Researchers, will get you started on your decoding journey. But why am I telling you all of this? It's because for times like this, unless you're at that very high level on your market where you have the whole thing solved, it's very hard to say that from here the market must go to this specific point and then it must go here or it must go up here. Until we have that knowledge on every market that we want to trade, well, for those markets that we don't have it on, we need to use form reading. So that's what we're going to focus on for the rest of this video. So we've had a run down here. Now we're running up. Let's track this monthly move as it goes up. And we're going to do that by using smaller time frames. So here it is on a weekly time frame. You can see there's the monthly low. And see this whole move down here? That was a monthly downswing in the market, one monthly move. This is a weekly chart. So see on the weekly chart, we ran down, lower top, running down, small lower top there, running down, lower top, running down. Got a little bit messy at the bottom. We made a little false move to the upside and then bang, dropped into the low down there and then a stronger move up there. So that's your monthly low. Since that low has come in, we've put in a larger swing to the upside than we did last time. And so far, looking at this weekly move down, this weekly move is smaller than the last weekly move down. So if that's the case and we put in a higher bottom here, well, looking at Gann's sections of the market work, he says markets tend to move in 3 or 4 sections unless it's a pullback, in which case it can be 2 sections. So either way, we've had one section up. There's a pretty good chance we're going to get a second section up. But for that second section up, we need the first pullback after the first section to have ended first. By the way, here's the resistance card on the weekly chart. You can see that's run over the monthly range down. Gann spoke about these in chapter 2 of how to make profits in commodities. Very often overlooked, but a very powerful technique. The key with resistance cards is to note the ones, because you can put these on everywhere, but note the ones where the market is reacting at these milestones. So if you've been following the channel, you'll know that I was pointing out these 25% milestone hits when they were happening. And then when we got to 37.5%, we noted that because it had been working. And the current weekly swing or weekly higher bottom, if that's where it's going to be, is sitting on that 12.5% retracement there, or 1/8 level. So if this market does go up, it would make sense to watch the 50% and maybe 62 and 75. And if it goes past 75, well, that monthly move is probably done and we're probably going to take out that top. But that's a long way ahead of us. What I'm interested in now is working out, has this weekly pullback ended? In last week's episode, which was Aussie Dollar Insights before the rebrand to Forex Form Guide, but in last week's episode, we looked at this run down here, and it had all happened in one daily swing. So we were sitting down here, and I said, that's all one daily move down, one daily swing from the top there, down day, down day, down day, down day, down day. I said, at the very least, you're going to need a daily higher bottom or a failed move down. Well, we got that failed move down on the Tuesday, and we rallied strongly out of there. And we didn't quite take out the previous week's high, but we weren't far from it. And now that's all one daily swing up, and we've had a little bit of a pullback there. So that's probably the end of the weekly swing down based on Gann's form reading. And you can take this one step further. You can look at the 4-hour charts over here, and you can run a ranges card over that current daily move up as it starts to come down, and you can start tracking those numbers. There's a very interesting 50% level here, which is on the weekly chart. So from the weekly low, early February, up to the high here, and then running down here, that resistance card, that 50% level, we retraced to 62.5, and then we went above there. Now we're coming back down there. That 50% lines up with a 62.5% of this smaller daily run up here. So if we sat around that level, that's not a bad place to watch your swing charts. You're always watching multiple swing charts. It's never just one alone, but watch your swing charts and see what they tell you at those points. But I'd say looking at those charts, the Aussie still looks like it has a little bit more upside in it. In terms of timing, the next date that I like for an important turning point is the 13th of March. I do expect a strong run out of there, which means there's a pretty good chance it's going to be at least a weekly turning point. So it's very important. Is it going to be a weekly high or a weekly low? At this point in time, it looks a lot more likely to be a high than a low. So I'll be watching that and I'll be seeing what the market does there. Now, it can be a weekly high and not pull back very much, but there should at least be some decent pullback out of there. I'll check the swing charts throughout the week for my own trading, but I'll discuss them with you in next Sunday's episode of the Forex Form Guide. So that's the Aussie dollar in a nutshell. Monthly chart is showing a lot of strength to the downside. Not a huge rally so far. We have only had one weekly swing up so far though, so there may be more to come. We may get two, we may get 3 or 4 sections up. And if that's the case, we may put in quite a run to the upside. But if you take a look at the daily chart, we're still stuck in that roughly sideways 2-cent range that we've been in since December. So we're now into our 4th month of pretty choppy sideways moves on the Australian dollar. For this week, and it's not a recommendation, but for this week, I'll be looking to see what kind of pullback we get around here and looking to see if there's an entry there. At the end of the day, I do a lot of analysis on markets and I don't trade most of it. I base my trading on reward to risk ratio. I have a few kinds of setups that I like. And when I see those setups and I can get a good entry, which means my reward to risk ratio is high enough, then I'll look to take them. For now, all of this work that I'm doing, that's just preliminary to set the week up for myself so I know where we are on the different swing charts or on the different wheels, and I can look at where I may be looking for trades this week. Let's move on to the British pound now. A similar set of charts to the Australian dollar in many ways. You can see on the monthly chart, we ran down, we took out a couple of lows there, and we're retracing. Obviously, the retracement on the pound here has been stronger than the Aussie dollar. It's run up to the 62.5% level. We only got to the 37.5% level. So a bit more strength on the pound at the moment. On the weekly chart, you can see there, the higher bottom has already been confirmed. That was confirmed a month ago, and we're running up nice and strongly. As I've mentioned in previous videos on this channel, the 131 level is a big key, not just because it's the 75% level. There's a couple of things going on there. That would be a place I'd be watching very closely. If we break above there, there's a good chance we'll get a very strong run to the upside on the pound. Okay, but at the end of the day, these are scenarios. They're not recommendations. On the daily chart, you can see we've had 5 days up. So a pretty strong week on the pound this week. 1, 2, 3, 4, 5 up there. And that's evidenced over here on the 4-hour chart as well. That's been higher tops, higher bottoms pretty much all the way through the week, and just struggling a little bit at the end of the week on Friday there. Interesting again on the Australian dollar, it has actually started down. A similar sort of a pattern here, but it has started down, whereas on the pound that hasn't started going down yet. So let's break these charts down a little bit. This is the weekly chart. You can see there hitting bang on the 62.5% level. It wouldn't surprise me to see a little bit of a pullback, but as long as we stay above 50%, probably even 37.5%, it's still looking reasonably strong and in good shape to test that 75% resistance level. If we then look at the daily chart, you can see over here, that daily swing is probably over. We've had a 4-hour chart run up, false break that top, and then come straight back below there. So if we head down at all on Monday on the pound, that's probably it for that daily upswing there. But what I also wanted to highlight here on these two charts side by side is a really good example of how to form read a market. And you might like to watch this bit a couple of times. Have a look at this daily swing chart move down here on the pound, just a couple of days down there into a little double bottom there. Not the best looking double bottom, but a little double bottom nonetheless. Now have a look at that move on the 4-hour chart. And that's why I've got them side by side here. It's this move here. Have a look at it. You've got a run down 1, then a pullback, 2, and then a pullback, and then 3. Gann said market moves tend to happen in 3 sections. Then the market turns around, gives you a higher bottom, and off it goes. That higher bottom and then the breaking of those tops there tells you that that down move is almost certainly over, and we're now heading to the upside there. That's a bigger picture double bottom, and you've got a little first higher bottom trade on the 4-hourly chart there. That's the sort of things Gann would be looking at. Gann's not looking at it in every circumstance saying it must go here, it must go here, it must go here, it must go here, he'd be looking at that and saying, okay, you've had 3 sections down and now you've got a higher bottom in there coming out of double bottoms. That may be a trading opportunity. And then of course he would manage his risk with a tight stop loss. And once the market starts running up, move that stop loss to a point of break even so he couldn't lose money on the trade. So that's the pound, similar to the Australian dollar, but looking stronger at the moment. For me, it will be interesting. I think that this daily run-up is probably just about done, and we will see a little bit of a pullback. But once that pullback comes in, it will be interesting if this range here, if you could get the length of this range, and if we drop into a low, and you can get an equal amount of that range running up from a low into that 131 level, that would make it a very strong level to watch. But that's thinking about 3 steps ahead. At the moment, it's got to stop this up move, and then it's got to have a pullback, and then we see where that comes in. And we can watch those smaller swing charts. And you can watch these swing charts on many time frames. You can have about 10 or 12 lined up side by side. I tend to find 3 to 4 is good for most trading scenarios, depending on whether I'm trading a small cycle or a large cycle. All right, moving on to the Euro US dollar now. Again, similar pattern here. You can see on the monthly chart, we've cleaned out some lows there. This is looking more sideways than even the Australian dollar. It's been in this range. It's slightly bigger range, I know, about 1,000-point range, but it's been in this sideways range since 2022. And so all through 2023, all through 2024, and now still in 2025, we're in that same sideways range there on the euro. So it hasn't been making massive swings, but that may be about to change as well. There's a fair bit happening in the world at the moment. With Donald Trump being elected in the United States, you've got war in Europe, potentially more wars in Europe, and a lot of uncertainty. We could start to see some wild swings in either direction, up or down. Last week's bar, though, really surprised me on the euro. I was expecting, based on my work on the Australian dollar, which is my main market, but expecting the Australian dollar to go up. But that euro run up, that's a very, very strong bar, that weekly bar up there. You can see on the daily chart, 1, 2, 3, 4, 5 bars all the way straight up there. And that's a much larger range up than anything we've seen for a while on the euro. So that alone is looking quite bullish. If we look here on the monthly chart, it's gone even further as a retracement than the pound has. It still hasn't, however, taken out that 75% milestone. For me, that's always a big key when looking at a market move. It doesn't mean it must get up there. I mean, sometimes the market will retrace 37.5% and fail, or 50% and fail, or 62.5% and then fail. But once it gets to 75%, if it goes further than that, that's one way of reading a market, in my experience, to say that if it's retraced more than 75%, it's probably going to clean out that old top there in this case. So if anything, the euro probably looking the strongest based on the retracements there. Having said that, though, on the weekly chart, we've had a big run up there and an expanding range up here. So at some point, it is going to have a little bit of a pullback. So if it can hold above that 50%, that's fine. If it starts to have a big pullback, sometimes you do see those big spike bars. Everyone gets a rush of blood to the head for some reason. The market interprets something to mean something and everyone piles in, and then that's it. That's the top. But it did manage to hold that close. Will be interesting to see what it does in the early days of next week. Looking at our daily and 4-hour side by side, much like the pound, except in this case, it's looking a little bit stronger. It hasn't even made a 50% retracement here. So there is a chance the euro could go higher again on Monday. But as a trader, we're always thinking about reward to risk ratio. And when a market has already made a very large move, you've got to question how much more can it go based on how much I'm risking. Let's say I've got to risk 50 points to get into this move. For me to make a decent reward to risk ratio, at least 5 to 1 as a bare minimum, can this market go another 250 points without a pullback? Unlikely. So again, as I said, as a trader, this is all preliminary work. And then my assumption is that you all have trading plans, you all have different trading plans, and that you will use this sort of work just as a starting point to say, well, based on all of the swings and based on the form reading, it looks like we're heading up or we're heading down this week. And then from that base point, you start looking for setups. If you think we're going up, you start looking for long trades or long setups. And if you think the market's going down, you start looking for short setups. So that's the euro, as I said. Based on the pound, I really liked that 75% retracement. Just based on the euro, looking at this big, strong run up here, my gut feeling is that this may be going further to the upside, but we don't trade on gut feeling. We trade on market signals, and there's a fair bit that has to happen for that to be confirmed yet. For me, if I was looking to trade the euro, I'd be looking for some kind of a retracement and then looking for a strong entry into the market with a low amount of risk. And finally, the US dollar, Japanese yen. That's been a very, very interesting one. since the middle of 2022, we've basically gone nowhere, or the US dollar yen has basically gone nowhere. Been stuck around this 150 level, coming below, going above, coming below, going above, etc., etc. At the moment, from this top here, we had a strong monthly run down, cleaned out this low here, and then we rallied hard, had a little monthly down bar here that became an outside bar, so a little bit of a false move there, which could have indicated a higher bottom and more upside. However, the market only ran up a small way, and then it's turned around and come back down there. So I'd probably ignore that swing there, and I'd probably treat that as a run down and a run up. So if that's the case, that's a big lower top on the US dollar. Now, ordinarily, you'd think if the US dollar's making a big lower top, well, maybe it's going to go down, and that means that the Aussie, the pound, and the euro are all going to go up, ordinarily. If that was happening on the pound or the euro, I'd say that's probably the case, and that's how I would interpret it until the market presents me with enough evidence in the opposite direction. However, the US dollar yen is a slightly different kettle of fish. Firstly, you can see it's made a massive move. It's over 50% up since its 2021 lows. So from down at around 100 to 160 up there, that's a huge move up. We haven't seen that move on the other currencies, so there is room for this to correct. But the Japanese economy has been a little bit dire for decades, and they've really struggled to pull themselves out of that situation. So you'll often see the market overcorrect against the yen, and if there's good news for the US dollar, it will run up quite strongly. But it doesn't always take that much bad news for this to reverse and go the opposite direction. Now, for me, looking at this, bottom line is that my interpretation of that, I would treat that as a lower top for now and watch that running down until the market gives signs of failure to the downside. So you look at your weekly chart, that's all one weekly downswing here. Tiny pullback there, and then it's run down to the 62.5% level there. Wouldn't surprise me to see a little bit of a bounce at some point, but this formation, that looks bearish to me. I think that's heading south. So as a trader, I'd be more interested in short trades should the right setup appear than I would be in long trades, just based on that bigger picture analysis there. So looking across the board on the yen, downtrend here, that's running down at the moment, although as I said, I don't really like that when you've had a long run down and only just runs up a fraction and then comes back down. Often that's still part of this initial run down here, and then that pullback is going to come at some point. On the daily chart, the trend is down and clearly down. Okay, lower tops, lower bottoms, all the way down there. What you'd be looking for if you're interested in going long the US dollar yen, and again, that's certainly not a recommendation, but you'd be looking on your smaller time frames to see the market break probably 2 or 3 highs. So have a bit of a run, break some of those tops there, and then have a pullback and show some support there and some strength, and then you can start thinking about those sorts of trades. But for the time being, that's looking quite bearish. Now, things can change overnight, and I'm recording this on Sunday. By the time Monday morning opens up, who knows what's happened in the world? Things move so quickly these days, but that's how I see it at the moment. So that's how I see the 4 currencies. Let's have a quick look at the economic calendar to see what's coming up this week. Obviously, Wednesday, the 12th of March, 11:30 p.m. Sydney time, we've got some big CPI numbers coming out for the US. So I'm sure with inflation still being a bit of a hot point in the markets at the moment, I'm sure people will be watching that with a lot of interest. As I said, the 13th of March is my next time pressure date in the market. I've been watching that for a long time. So it'll be interesting to see the position of the market, say after Tuesday, as we're approaching this 12th of February period. Now, that doesn't mean that, there's an announcement, that's where the turn must happen. But often, if you're looking at a particular date in the market for a turning point to come in, and then there's an announcement there, it's not uncommon for the turn to happen at the time of the news announcement. People will then take that and say, oh, look, the news caused that move to happen. Well, Gann had a different opinion on that, and you can find that in his books. Then on Friday night, we've got the GDP numbers on the pound, and early Saturday morning, we've got the preliminary consumer sentiment and inflation expectations for the US. So based on the calendar, it's the second half of the week that has some interesting announcements. Not much happening on the first couple of days there, but as I said, it will be a very interesting end to next week, I think. And I'm pretty sure we'll have a fair bit to discuss in next Sunday's episode. A quick reminder, if you're interested in learning more about form reading, what I'm going through here just scratches the surface. If you are interested in learning more, they are the two sources that I would recommend. No, I don't get paid anything for recommending those. I just think it's the right thing to do. And people often ask me anyway, where do you learn this stuff? That's where I learned it from. So that's it for this week's episode of the Forex Form Guide. I hope you enjoyed it. Let me know in the comments below. I'd love to hear your feedback and if you have any recommendations for next week's episode. My aim is to get these out at 7 p.m. every Sunday. So until then, have a fantastic week. All the best with your trading and your Gann studies, and bye for now.